weekly sit-down and one-on-one with the CEO, Madi Greenspan, of Quantum Economics and Quantum Expeditions, where they are actively mining Bitcoin right now. And if you listen really close, you can hear those ASICs humming. You know what they're saying? Satoshi, Satoshi, Satoshi. My first question for you, Madi, comes from X, and a user by the name of Wake Up Placer wants to know, would the Chinese Communist Party interest rate cut have any inflationary impact on the U.S.? Could a choice by China to print more Chinese currency cause inflation in the U.S.?
That is a very interesting question and a great way to start off today's video. Global inflation has caused a lot of economic turmoil, especially over the last few years since the coronavirus. Usually, however, it's the United States who ends up exporting their inflation because many countries around the world are actually holding US dollars and using them for trade or just holding them in their reserves. Whenever the US prints money, that tends to cause inflation all over the place. Also, and as we can see here in this graph from the Financial Times, which is showing the inflation rates of all of the top economies in the world, there's a very tight correlation for the most part. And that's not because one causes the other per se, but generally speaking, it's because when the United States is printing money, other countries are doing the same, and then vice versa when they're tightening up the belt and restricting monetary policy, other countries tend to follow suit.
Next for you, advisor, is this one from Melissa on Facebook. Melissa's not confident in Bitcoin right now. Matter of fact, she's waiting for a double bottom. Have you been watching too much Kramer? He's waiting to buy at about $10,000 due to market conditions. All right, so what are your thoughts and data points, and what advice would you have for Melissa moving forward concerning the price of Bitcoin, and when might there be a good time to re-enter the market?
Oh, Melissa. Yeah, well, so while I would never, ever rule out a possibility of a price happening, I've been in the market long enough to know that surprises can and often do happen. Over time, we've been seeing Bitcoin rising steadily in value. Here's the 2017 bull run, which it hit $20,000 for the first time. Here's your price target. I've marked it on the chart of $10,000 per coin. In November 2021, we hit 69,420 per coin, which was the all-time high at that time. And now we're just around 51,000. So while it is possible, yes, I mean, it could prices go up and prices go down. There are a few data points that I would point to support my current target. For those of you following me on Twitter, I've pinned my target of $280,000 per coin by the end of the year. Number one, of course, the ETFs is something that we can look at. Cumulative spot Bitcoin ETF volumes just shy of $50 billion in just over 5 weeks. So far so good. That's high adoption on Wall Street. We look at on-chain data as well. We can tell this is the amount of Bitcoin that's actually sent over the Bitcoin network. So this is wallet-to-wallet transactional value, and that's gone from under $6 billion at the start of 2023. Now we're averaging at around $16 billion every single day. But the real thriller is my assumption that nation states will be adopting Bitcoin over the coming year or two. We've already seen El Salvador fully embracing Bitcoin, and them being that first case study for a nation state or small nation state adopting Bitcoin has gone swimmingly well. Their total economy has been transformed by Nayib Bukele to the point where, you know, even El Salvador has gone from one of the worst places to live to one of the best places to live in just a few short years. We've also seen the Central African Republic fully embrace Bitcoin. And I believe that several nation states, especially Argentina, with the new president Javier Milei, is also likely to go the Bitcoin route. The central banks realize that they can add Bitcoin to their balance sheet as a way to hold on to a reserve currency that isn't susceptible to inflation, like the US dollar, but is actually designed to go up in value over time, I believe that they'll be seeing FOMO, or fear of missing out, on unprecedented levels. And this is exactly what we saw, in 2009 when quantitative easing first started happening and central banks were announcing that they're going to be printing money in order to support the economy. Everybody ran to gold. Well, Bitcoin is just a better gold. It's more digitally scarce, more verifiable. It's much easier to understand. It's easier to hold. It's easier to transact with. And here we can see the market cap of gold versus the market cap of Bitcoin. Bitcoin in green, of course. It still has a very long way to go to catch up. So even if Bitcoin just caught up to where gold is right now, not even exceeding it, that would come out to around 1,518% increase, which would put the price of Bitcoin at around $774,000 per coin. Past performance does not indicate future results, and do not ever invest more money than you can afford to lose. I personally am all in on Bitcoin and digital currencies, but everybody's got to make their own decisions.
Brian David Casey on Facebook has this one for you, advisor. Still more things I need to get past before buying more Bitcoin. Isn't there an endless supply? Why can't they keep mining it? And what happens if our governments restrict us from using it in favor of their digital coin?
Well, thanks for asking, Brian. And in fact, no, they cannot just create more Bitcoin. Digital scarcity is one of the fundamental principles of Bitcoin, and it's what makes it truly unique. Unlike any other asset on the planet, there is a finite supply, and the supply is actually known. So this is hard-coded into the blockchain. Satoshi Nakamoto programmed in that there will only ever be 21 million Bitcoins that will ever be in circulation. So far, there's about 19 million of them that have been produced, and the remaining 2 million will be produced over the next 100 years or so. And the way that works is that every 4 years, there is something called a halving event, and it's actually coming up right around the corner in April. And the reward for mining one block of Bitcoin goes down. So the first, when Satoshi Nakamoto started Bitcoin, it was 50 Bitcoins every block. Every block is about 10 minutes. There was 50 Bitcoins being produced. After that, from 2012, which was the first halving, there was only 25. 2016, 12.5. 2020, 6.25. And now in 2024, we're going into only 3.125 Bitcoins produced every block. And as we go, there's less and less and less Bitcoins being produced until we get to that 21 million hard cap. That 21 million hard cap can only be changed if the entire network agrees, or a vast majority of the network agrees that it should be changed. And of course, because people like holding Bitcoin and they like the value being stable, nobody has ever seriously proposed that we increase that 21 million supply, and I doubt anybody ever would entertain that thought. Your second question is even more interesting, because this is the other thing that gives Bitcoin its value, is because we don't need permission to use it. Nobody needs permission to use it. Anybody who has access to the internet can send and receive Bitcoin transactions. Bitcoin was created specifically to be a form of money that is not controlled by governments or banks. So governments who end up adopting Bitcoin early, they will benefit from that. Some governments will and are fighting Bitcoin, and they're going to be hurt from that in the long term as Bitcoin finds a more prominent place in the global economy.
There's the guy with the Series 7 you need to be listening to. The newsletter is always free, quantumeconomics.io. Market analysis, insight, and more. Be smart, be safe, stack sats, hodl, self-custody your Bitcoin.